Lee Kranefuss, 55 Capital is launching a dynamically managed series of portfolios built entirely with ETFs. Why is this such a big breakthrough?
It's a big breakthrough because the idea of investing across asset classes and across the globe in an environment like today where you can't focus on specific asset classes, there's just not yield from bonds and the like, is something that's been around a long time. Historically, it's been done with huge numbers of stocks, swaps, futures. We can now bring that out, investing in stocks, bonds, and alternatives, and dynamically doing that all with ETFs. So it's bringing what has been traditionally a very complex and selective hedge fund product into separately managed accounts with ETFs now.
Well, the first strategy I'd like to talk about is dynamic macro. Sounds dynamic. What does it mean?
That's what it means. In that case, you're investing across equity, bond, and alternatives markets, and looking at domestic, foreign, and emerging market exposure, and a few other variations, but you're able to switch out or adjust the amount of exposure to each sector, and within it, how much you do, for example, by country, and things like that.
And the next one is enhanced macro. So is this some kind of a twist on the dynamic macro?
Yes, that's a product where you have a more static mix, so you maintain the exposure to equities, bonds, and alternatives appropriately, but do some shifting around within them. So it's taking away one degree of freedom, but a little more certainty about what the asset classes are.
All right, so next two strategies, global allocation and global equity. Why don't you tell me about these? And also, can you tell me whether or not they're hedged? Because a lot of people are looking for that when they invest in foreign stocks and foreign ETFs.
There's two questions in there. First part, the global is just the bond and equity portion. So that's for people who don't want alternative exposure through ETFs in their portfolios. And then the second product is just the equity sleeve, if you will. Again, looking at domestic, foreign, and developed market. Now, you asked about hedging. One of the things we do is we look at, in the alternatives portion, things like currencies, in addition to other things. And so sometimes there will be what would substantially look like a hedge to people, sometimes not. It really depends on our assessment of risk, and that's a very important part of our approach. With this kind of strategy, you're tending to cover the waterfront, have lots of positions on, and then adjusting by risk, not so much by forecast. So it can look like it's hedged at times, it might look like it's not at others, but that's really part of the holistic package.
All right, and then one more, you have an alternative strategy. So how does this compare to a lot of the other alternatives on the market right now? Because we're hearing a lot about liquid alternatives, and the term gets thrown around a lot.
Right. Once again, what we're doing is using alternatives, which is a very broad term, and if we had 10 minutes, we'd go through that, but implementing it with ETFs. One of the exciting things is today you can take techniques that macro hedge funds, for example, have used for a long time. They're well proven, but you can do it all with ETFs, which means you can offer it, as we do with separately managed accounts, of as little as $250,000 and pricing of 40 to 100 basis points instead of $25 million minimums and 2 and 20 pricing.
All right, and then finally, you've been around the ETF world for a long time, maybe longer than anybody, because you really introduced the iShares brand, which is now one of the biggest on the planet. So how can people access 55 Capital's new strategies?
Well, right now, as we're launching, people will typically be going through the same places where they would have bought ETFs, which is by and large through advisors, whether they're registered investment advisors, independents, or brokers, anyone who's managing money for clients who might be using ETFs today. What we're doing is helping them by setting up a separately managed account platform where they can take their client money and see fully transparently what we're doing, what we're holding, what we're changing, and understand how we do it.
And you don't care if it's an iShares ETF or a State Street, you're agnostic when it comes to which ones you're using?
That's right. We're an open architecture platform. That's very important because where the industry has gone is very often things like smart beta. And in some cases, there comes a high cost, and in some cases, what people claim may not be what's reflected. We can build, for example, things like value or momentum out of the lower cost building blocks. That's what the research team does. And so people get the best of both worlds. They get ETFs, low cost, sophisticated strategies, all in a separate account with low minimums and very reasonable fees.
All right, we're going to watch it. Thanks a lot, Lee.
Thank you.
And thank you for watching The Street.